Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Consensus in Austin, Texas. Joining me for this segment, we have Nadine Chakar, Head of Digital Assets at DTCC and former CEO of Securrency. We're here to discuss DTCC's role in the digital asset ecosystem and industry-wide framework to advance the adoption of digital assets. Nadine, it's great to have you with us. Welcome to TradeTalks.
Thank you for having me.
Tell us about DTCC's role in the digital asset ecosystem.
So DTCC entered the digital assets. They've been actually working with digital assets for over 10 years.
Oh, wow.
Back in December, they acquired Securrency, which was the firm I was leading. And Securrency is a blockchain infrastructure company. So the objective here is I'm sure you know what DTCC does, but we actually safeguard the safety and soundness of the market. And our aspiration here is to do what we do for traditional assets for digital assets. Right. So provide infrastructure, provide scalability, resiliency, so we can get the whole industry working off a common platform versus the mushroom of infrastructure that we have all over the place. So that's the objective.
So how are you working with clients and partners?
So we are owned by our clients and partners, right? So DTCC, just a brief history, DTCC was founded about 55 years ago to deal with what was known at the time as the back office or the paperwork crisis. And they actually had to slow down trading in those days just because the markets got overwhelmed with the level of paperwork. And then if you fast forward 55 years later, we're trying to play that same role. So everything that we do is done in partnership with our clients. We've got governance that includes our clients. And it's not just our clients, but we're also reaching to partner with fintech companies that will have very specialized skills to help complement a very deep knowledge of the markets. When I was at Securrency, I very much realized that despite the fact that I thought we had amazing products, it was very hard to make a massive ripple in capital markets without really having that partnership between fintech and the capital, where the clients that have capital.
I mean, and that's a key theme that you hear in fintech all the time, that you have, the speed as a smaller fintech company, but then you need this, to be able to scale with a larger, more established capital markets company, if you will.
As you know, our rules are very complex. We have multiple regulatory agencies, and sometimes a fintech, and listen, I've been on both sides of the aisle, right? So you get frustrated that these big companies are slow, they don't move quickly, but there's a good reason behind that. Like the background upon which we operated is very, very complex. So for a small fintech company, the burden of that oversight and the cost of trying to comply is too much. So, but our hope is that DTCC, by bringing both our clients and bringing, so buy side, sell side, fintech, right, market infrastructure, and really trying to push it forward. Like this morning, we published a paper in partnership with the large two ICSDs, both Clearstream and Euroclear. Now, this was the beginning of a framework, if you will, for us to be able to look at controls and standards around digital assets. Because we talk about interoperability, but we've never defined it. Interoperability is a bit of technology, it's a little bit of data, it's a little bit of standards. We've just all got to speak a common language, if you will, to be able to push forward.
Yeah, I mean, it's been an interesting couple of weeks in terms of regulatory framework.
It's been amazing.
And this happens with, whether you're talking about AI or fintech companies, the technology evolves so fast. And to your point, our legislators and our regulatory framework, it's complex. And you can't keep up as quick as the technology evolves, and there's a reason why. At the end of the day, these are designed to protect customers, right? So that is always going to be their mandate.
Absolutely. I mean, end client protection is, consumer protection is the end all to be all. And it's always been like that throughout history. Technology leads, and then we have the regulatory and the legal framework that follows. And it's not because they don't understand it, they do. It's not that they don't get it, they do. But it's walking through, making sure that they're being thorough. And we have been able to prove time and time again when we sit down and work in partnership with our regulators, we get to where we need to be. And Wisdom Tree Prime is a good example of something that took 3 years. 3 years to launch the first tokenized 40 Act fund on our platform. But once we got that, it became a routine because the regulators got comfortable with the filings, they got comfortable with the technology, with the risks, with the mitigants, and it just takes time. And even if we got all the legislation that out there past. It's still going to take time for it to work through the system. And at the end of the day, especially with real world assets, it's not just tokenization. You've got real world assets and you've got the digitized assets that go with it. So we've got to compare and contrast and bring those together, because an institutional investor is going to have both. Now, what's really fascinating with the era that we're going through right now is, for the first time in our history, this revolution, whether it's crypto, it's digital technologies, everything, has been led by the retail side, right? So it's taken a while for the institutional side to catch up, and we're starting to see the winds change here in a good way. You mentioned as well, we had a banner week last week. We got FIT21 passed. We had the ETH spot ETFs approved. At least the applications got approved. So this is all trending in the right direction. And I think it's like the foliage. One morning you're going to wake up and you're going to see everything in bloom. And it's my expectation that we'll continue to trot around until we get there. But DTCC's role here is simply to get this coalition of the willing together for all of us to work forward towards a common infrastructure that is open, that's resilient, that's interoperable, that's scalable, as we do with the markets today.
And it's so interesting that you mentioned this is almost like an inflection point here. I mean, look at the conversation that you're having at Consensus this year. It's very capital markets focused. Right behind us at the Money Reimagined stage, they're having their crypto policy summit. It looked very different than it perhaps might have 5 years ago, but to see how the industry is evolving and not necessarily just talking about platforms, applications, the technology behind it, but improving the user experience and making it accessible and digestible for everyone. They're very refreshing conversations this time around.
You're spot on. It is all about the user experience, and it's all about user safety, right? Like, those are the two unmovable, non-negotiable issues that are there. But when you walk around the floor, there is an energy that I've never felt before. Yeah. There's a convergence of TradFi and DeFi coming, and I think both parties are now realizing they need each other to advance this, and trying to get to the ultimate DeFi experience is really going to have to run through a quasi-centralized TradFi type of setup until we get to nirvana that we're all seeking. But that will take a while. But when you walk around, to your point, the conversations, and it's funny, yesterday I think I saw a guy in a tie. I haven't seen a guy wearing a tie in a long time. But you have all walks of life coming together to make this digital economy a reality, and the energy is just off the charts.
Yeah, I would agree with you, Nadine. Appreciate the insight. Thanks for joining us on Trade Talks.
Thank you so much.
And thanks for joining me from Consensus. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.